Hey, what's going on? What's going on? What's going on? Hopefully, you guys had a blessed and great Merry Christmas. Praise to the Most High. We here. We back again. Market had a trading hangover, but we still here. You know, we trading the same plan, the same pattern over and over and over again. I know a lot of people are still traveling for the New Year's coming in and everything like that. I do expect the market to kind of be a little bit lackluster, obviously today and the rest of next week. So we'll see what happens. A lot of us came in and we traded our patterns, our setups in the first 30, 45 minutes again, and we go about our day. So today I'm going to cheers you with my iced coffee, and I'm going to show you how we trade a pattern. But not only do we day trade, we swing trade, and we invest, right? The power of all three is some of the key staples to building long-term wealth, generational wealth. And the best time to get started is today, right? Because everyone says, well, the market's in a bubble, it's high, and over the next 5 to 10 years, even if it did fall and give us like a COVID crash, what happens? The market slowly trends back to the upside. So obviously, I'm not saying that I think a downfall like that should happen or could happen or will happen, right? But just stacking the odds in our favor and having a plan for whatever happens, that's the key, you know. But that's just my opinion. So I'm gonna hop on here. I'm gonna show you why I called out some of the trades that I do over our live stream. Show you how we swing trade as a team, just one of our patterns. Then I'm going to show you also how we invest using the same exact tool and system that you see right here on the screen. So let's dive right in. Before we get started, if you're watching this, just let me know in the comments where you're from watching this. Love to see how far we can make it across the United States and the world. So you see the smiley face right here on chart number one. Why we called out something like we did. We know when we come and hit one of our pivots right here, we like to take breakouts if the candles are green, and if the candles are red, we like to take breakdowns. And sometimes unique things happen, but having a plan and trading your plan for and when that does happen, that's how you get successful. But in the end, right, you got to have faith in your own trading system, right? So coming in here, the market is green. We're in between our pivots, didn't like nothing here. Then our candle turned red here. We hit our magnet, told the team right here, if we do break down underneath here, I'm looking to take puts. But guess what happened? The market never did that. It pushed back to the upside. That quickly made me change my thinking and plan. And day trading, you got to be able to execute in a little bit faster environment, right? So then I went from taking shorts or wanting to take shorts. Now I want to take the longs. So then I called out some longs right here. We took the breakout. And obviously, if this is our stop, our target is right up here. And price goes on up there. Boom, we good. If you took this trade, 87 up here to 94. That right there is about $350 per one ES contract. A lot of people, they got that one trade right there, and they're done. A measly $300 a day is six figures, just about $100,000 at the end of the year. And if you could do that in an hour or two a day, that right there is true freedom from time, you know, because there's people that work full-time jobs that make $20, $30, $40,000, and they're working 80, 70, 60 hours a week, right? Anyway, I don't want to dive too much into that. We called that trade out, and we were 1-0. Then price come down, and our candles were red. We want to take a put. Then our candles turned green. We want to take a long. Never happened. So then this is the unique situation about having a plan. When our candles went from green to red, I wanted to take a breakdown here. Then this candle turned green, and I want to take a breakout. So now I'm taking breakouts right here, or I'm taking breakdowns. Guess what happened? We took this trade right here, called it out. 82 went down here to 70, 76. There's another 300 bucks. Could you have gotten 100 or $200 on this move? Yup. Check. Could you have gotten a couple $100 on this move? Yup. Check. Guess what? We're now 30 minutes into the market. You good? You happy? Hey, go enjoy your day, right? So I'm going to erase all that. As you can see, there was more trades that some others did take. We had another breakdown right there. We were good. We had a breakout right here to the upside. And yeah, you know, at what point do you stop trading? My goal was to get green, stay green, and go enjoy the day, right? The next chart we have right over here where the star's at, this is NQ futures. Same kind of setup. Want to take puts. Then we took calls right there. Bam, we got it. Then price candles turned red. We ended up calling the put entry right here. Stop out, and we got this grand slam. So NQ treated us a little bit better than ES. First trade 910, up here to 935. There's 25 NQ points. Second trade 83. It flushed down here to 39. We'll just say 40. There's 40 possible points plus 25. That's 65 NQ points. We only need 10 or 20 NQ points a day if you're trading full contracts, right? Because the slow and steady always win the race. But more importantly, when you trade the probability and the pattern over and over and over again, those singles and doubles, they become the grand slam or the home run, right? Now, coming to this chart where you see the star. The candles were red. We'll call it out a breakdown, right? And price went against us, came back down. Boom. There's a good one. If you missed that first one, you could have taken another trade right here. Boom. There's another one. And as you can see, look where price is at. Up here from like 78 down here to 25. Now, I have to say this. Could you have gotten a little piece of these moves? Absolutely. And that's what we do. We trade with confidence, we trade the probability, and we do the same thing over and over and over and over again. All right, stock option traders, right here, where this star is at. What happens is, Tesla coming in here, you could have taken the breakout right there. Boom, you're good. Candle turn red, take the breakdown right there. Boom, you're good. Bada bing, bada boom, right? Tesla was super easy. And then we come in here to our last trade that I called out was SPX Lotto. The power of this setup is we use our AI probability high 69.85 as a potential option contract. We took some calls right here when it broke above that orange area, and a lot of us got about 90 cents or $1 a contract, and we happy. We weren't expecting too much movement because, well, obviously today is the day after Christmas. Look at the volume. Historically, it's very, very light. But once again, in the first 30 to 45 minutes, you could have gotten some trades and you could have went about your day. So while we're here on SPX, I'm going to go to SPY. I'm going to show you how we can swing trade with the same pattern, not the same pattern, but the same tools, which give patterns. So without the patterns or with the patterns, that's how we know and we trade the probability, right? So what we're looking for right here is we're looking for a green candle, green arrow. You can take the trade at the end of the day or the following day. We're looking to get expansion, meaning in the direction of our trade over the next 3 to 5 days. And if we buy 4 weeks of option expiration time, then guess what? That's an easy winning trade right there. So we're going to walk through this. Had we have started this in July, right, and we're about to be in the middle of December, July, August, September, October, November, December. You see that? That's 6 months. If you just watch this one trade, your average is about 2 trades, give or take a month, maybe 3 trades. Do we win every single trade? Absolutely not, but we're very good at what we do. So let's say you have a $2,000 account, right? And you trade with $500 every single trade. It's a little bit more aggressive than what I would do, but if you just used this for your cash cow, you could leverage that because with a probability of over 80%, we expect to win 4, lose 1, win 3, lose 1, and average losers about 30%, average winners about 30%. So give or take, it's a 1-to-1. We do go risk-free once we go up about 20% in a trail stop, but sometimes it just keeps running in our favor. And that's a good thing, right? So check this out. Had you traded this one pattern on the swing trade side, green candle, green arrow, once we move $2 or more on the share price, we know that's about our 15-20% ROI mark. So right here is about $6.20. The next day, it goes up to $6.23, almost $4. So this right here, this little move right here is enough to give us about 35-40% in one day. Right? If you're buying 4 weeks of expiration time. Even if it gave you 30% because you got a crappy fill, guess what? You're right at the baseline, and that's why we say at $2, we like to go risk-free. Sometimes it'll move $2 or $3 and then reverse on us, but that's why we must use risk management. So check it out. There's one winning trade. There's two winning trades. There's three winning trades. Oops, there's a loser, 3 and 1, and that's why you use risk management. Over this little four trades, right? Imagine making 30% times 3, which is 90%, minus the 130%. You just made 60% ROI. So in 1 month, if you used $1,000, you made $600. And your total time in the market is about 5-6 minutes. It takes about 2 minutes per trade. So 8 minutes total, you made $600 in 1 month. Is that something that you can get down with? You don't need a lot of time on swing trades, but because we have different tools that we use that once we hit a desired target, right, we get to choose it, it'll automatically put us in a risk-free trade. And that's just using some of the orders and brokerages that we recommend and we use. So right there, if you use $500, give or take, there's $300. Like, you know what I'm saying? So it's money to be made. All right, so I'm going to erase all this. So right now we're 3 and 1. Right here, we are 4 and 1. Here, 5 and 1, 6 and 1, 7 and 1, 8 and 1, 9 and 1, 10 and 1, 11 and 1. Oh, loser, 11 and 2. 12 and 2, 13 and 2, 14 and 2, 15 and 2. There's 15 wins and 2 losses. This one only moved $2. So let's just count it as a loser. So instead of 15 and 2, let's do 14 and 3. 14 divided by 3. That's 17 total trades in 6 months, right? So if we do 14 divided by 17 total trades, our win rate is 82%, right? Now, if we average 30% ROI winner, right? 30% times 14 total trades, that's 420%, right? And our 3 losers are 30%. We go to minus at 30, 60, 90, minus 90. Guess what? That's 330% ROI. So 330% ROI. If you used $1,000 for every single one of these trades, right? In 1 month, or I'm sorry, in 6 months, right? Your $1,000 that you leveraged per each trade now turned into $4,330. So you see in 6 months how that could boost your account, right? Now, obviously, there's people that trade with 5,000, 4,000, 10,000 per trade. Now, if you traded with 10,000, you just add a 0. Guess what? You made $43,000 in less than or 6 months, right? Some people come in with this and only use $300. Had you used $300 per trade, you now leverage your $300, and now your $300 is 3, 6, 9, right? 30, 60, 990, 10, 11, 12. You're basically $300 is now worth $1,300. And now you're getting into a new situation to start trading with more money. And we do this over time. So you see this probability where it says 86%. We're actually underperforming with this chart because it only said 82%. So I expect us to get a skew of winners. But the true power with this is compounding it. And as your account grows, you can slowly start risking more money. And this is only trading one stock. Imagine adding 2 or 3 or 4 stocks to your watch list or your cash cow, and it adds up more. So instead of taking 17 trades in 3 months, you might take 45 trades in 3 months. And let's say instead of making 330%, you only made 250%. But the volume returns your money a lot more because you're in so much more trades. You know what I'm saying? So instead of only making the 3 or 4 grand, you might make 10, 12, 13 grand because your account's going to grow faster for you to compound it, right? So anyway, we're going to go to everyone's talking about Bitcoin going to 0, this or that. We're super low. I'm going to show you an investing method with the same pattern. We're going to put this on the weekly time frame, right? And I'm going to bring this up, and I call this like the real estate method, right? I'm not going to go way over here when it started at 25 cents because we all know what the big picture is. But we're going to start right here in 23. So in 2 years of investing, you have a $1,000 account. And this is why Brandon, day trade, swing trade, and invest. Here's a buy right here. Here is another buy, right? You put 1K into your account right there, and your buy is $16, right? Up here at 30, right here, is this it? Up here at 30, it's 2K, right? Up here at 45, there's 3K. Up here at 60, right, there's 4K. You know what I'm about to tell you, though? If you put 1K into your account, right, and it goes to 2K, sell out and let 1K ride for free. Now you got 1K on the house and you got 1K in the market. Once your 1K comes way up there, it's now 3K. Sell out, bring 2K back. Now you have 3K on the sidelines, and then you get a reset. Now you get another buy, right? And you put another 1K in. So now we have 2K in the market. Well, our first entry was here. Second entry is here. Our average is about, give or take, right here, it's about $30 a share, and we have 2K in the market. So at 60, guess what? There's 4K, right? Up here, almost at 90, there's almost 6K, but we're just going to say 5K, right? When your 2K hits 4K, sell out, let 1K ride, bring 3K back. Now we got 5K sitting on the side, right? And as price keeps going up, your 1,000 turns into 2,000 way up here at 90, 95, sell out. Now we got 6K, and we have $1,000 in the market for free. So in 2 years, we just went from $1,000 to $6,000 trading a simplified investing plan, right? Being strategic, what I call the real estate method, because we're buying and we're holding it for extended periods of time and milking it and taking our profits along the way. Now, the reason I like this method is because guess what? Here, if you put in 1K and it came up here and your 1K is a 4K right there, up here it's 5K, up here it's 6K, up here it's back at 4K, guess what? Your 1K is only worth 4K right now. My 1K is worth $7,000, right? So your 1K, you hodlers, right? It's the easy way to do it. You could do it that way. Your 1K is 4K. My 1K is 7K. So I outperform you every single time by taking strategic investments over time, right? So that's why I do things the way that I do. Now, another example of why I don't like the hodl, or what you guys call it, hold, hodl, whatever. If you buy 1K in right here, right? Up here, your 1K, where you're buying at 12 bucks, we'll just say 15 again. Up here at 60, 15, 30, 45, 60, your 1K is worth 4K. Back down here, it's worth $750. For me, I took 1K and brought 3K back to the side, and now my 1K is worth $750 here, but I have 3K to show for it. You hodlers have nothing. So then I outperform you. Realistically, your 1K is worth 4 or 5K over here, but my 1K is really worth 7 or 10K when I'm taking profits and buying again, taking profits, buying again, taking profits, and that's why I pay myself. Why? Because my account grows once I pay myself. And that's smart investing, what I call the real estate method, and that is trading made simplified, day in, day out, week in, week out. So with that being said, appreciate you guys. If you want to get involved next week and start a head start into January, just comment beast mode below. We'll get you situated. Reach out. I'll send you an invite personally, and we're going to rock and roll. With that being said, you guys have a blessed one. Catch me on the next one. Have faith in your trading system. Beast mode out.